Welcome, dear viewers. Today, comprehensive exploration of one of the most powerful, yet potentially dangerous financial instruments of our modern era. In our rapidly evolving digital economy, where financial innovation continues to reshape how we interact with money, manage our resources, and conduct our daily transactions, credit cards have emerged as perhaps the most ubiquitous and influential financial tool ever created. These small plastic rectangles, measuring just 3.375 by 2.125 inches, carry within them the power to transform lives, build financial empires, and unfortunately, when misused, destroy financial futures with devastating consequences. Today, we embark on a critical examination of how credit cards function as a double-edged sword in our financial lives, exploring both their tremendous potential for empowerment and their equally significant capacity for financial destruction. This is not merely an academic discussion, but a vital conversation that could fundamentally alter your relationship with money and determine your financial destiny for decades to come. Credit cards, the ultimate double-edged sword. Credit cards represent the quintessential double-edged sword in the modern financial landscape, embodying a complex paradox that simultaneously offers unprecedented financial freedom and poses existential threats to personal economic stability, requiring extraordinary wisdom, discipline, and strategic thinking to harness their power while avoiding their potentially catastrophic pitfalls. On the positive side of this financial equation, credit cards provide an unparalleled level of convenience and flexibility that has revolutionized how we conduct business, make purchases, and manage our daily financial transactions, enabling cardholders to make instant purchases anywhere in the world without the burden of carrying cash or worrying about currency exchange rates, while simultaneously offering robust legal protections against fraud, theft, and unauthorized transactions that far exceed those available with cash or debit cards, including comprehensive dispute resolution mechanisms that can reverse charges for defective products, services not rendered, or fraudulent activities. Furthermore, credit cards serve as powerful tools for building and establishing credit history, which forms the foundation of your financial reputation and determines your ability to secure favorable terms on mortgages, auto loans, business financing, and other critical financial products throughout your lifetime with responsible usage. Patterns demonstrating to lenders your reliability, trustworthiness, and financial acumen. The rewards and benefits ecosystem surrounding modern credit cards has evolved into a sophisticated value proposition that can generate substantial returns for savvy users, including cashback programs that can return 1 to 5% of all purchases, travel rewards that can fund entire vacations through accumulated points and miles, exclusive access to airport lounges, comprehensive travel insurance coverage, purchase protection that extends manufacturer warranties, price protection that refunds price differences, and concierge services that can handle everything from restaurant reservations to emergency travel arrangements. Additionally, credit cards provide invaluable emergency financial resources through cash advance capabilities, allowing access to funds during unexpected crises when other financial resources may be unavailable, while also facilitating online commerce, subscription services, and digital transactions that have become essential components of modern life, from streaming services and software subscriptions to e-commerce purchases and digital marketplace transactions. The detailed transaction records and spending analytics provided by credit card companies offer sophisticated tools for budgeting, expense tracking, and financial planning that can help users better understand their spending patterns, identify areas for improvement, and make more informed financial decisions, while also providing valuable documentation for tax purposes, business expense tracking, and financial record keeping that would be impossible to maintain with cash transactions. However, the darker side of this financial instrument reveals a landscape fraught with dangers that have destroyed countless financial lives and continue to trap millions of consumers in cycles of debt that can persist for decades, beginning with the insidious nature of high interest rates that can range from 15% to 30% or even higher for subprime borrowers, meaning that a seemingly modest $1,000 debt can balloon to $2,000, $3,000. Or moreover, just a few years if only minimum payments are made, creating a mathematical impossibility for many borrowers to ever escape their debt burden through normal payment schedules. The fee structure surrounding credit cards represents another predatory aspect of the industry, with late payment fees that can reach $40 or more per incident, over-limit fees that punish cardholders for exceeding their credit limits, cash advance fees that typically range from 3 to 5% of the advance amount, plus immediate interest accrual at higher rates, foreign transaction fees that add 2 to 3% to international purchases, annual fees that can reach hundreds of dollars for premium cards, and balance transfer fees that make debt consolidation expensive and complex. Perhaps most insidiously, credit cards create powerful psychological triggers that encourage overspending and financial irresponsibility by creating an illusion of available money that doesn't actually exist. leading to impulse purchases, lifestyle inflation, and spending patterns that far exceed actual income and financial capacity. While the delayed payment structure disconnects the psychological pain of spending from the actual financial impact, making it easier to accumulate debt without fully comprehending the long-term consequences. The minimum payment structure represents one of the most mathematically devastating aspects of credit card debt, designed to maximize interest payments while minimizing principal reduction, ensuring that borrowers remain trapped in debt for the maximum possible duration, with typical minimum payments of 2 to 3% of the balance, meaning that $10,000 debt could take 30 years to pay off while generating tens of thousands of dollars in interest payments. The impact on credit scores from mismanaged credit cards can be swift and severe, with late payments, high utilization rates, and defaults creating negative marks that persist for 7 years or more, effectively locking individuals out of favorable financing options for homes, vehicles, education, and business opportunities, while also affecting employment prospects, insurance rates, and rental applications in ways that compound the financial damage far beyond the original debt. The legal and collection consequences of credit card default can escalate to wage garnishment, asset seizure, court judgments, and bankruptcy. Proceedings that can devastate not only the individual debtor, but also family members and dependents who rely on their financial stability, creating generational impacts that extend far beyond the original cardholder. Therefore, the intelligent and responsible utilization of credit cards demands an extraordinary level of financial discipline, comprehensive understanding of all terms and conditions, and unwavering commitment to specific behavioral patterns that maximize benefits, while completely eliminating risks, beginning with the absolute requirement to pay the full statement balance every month before the due date to avoid all interest charges. Treating the credit card as a convenient payment method rather than a source of borrowed money, and never charging more than can be immediately paid from existing funds in checking or savings accounts. Successful credit card management requires establishing and religiously adhering to strict spending limits that represent a small percentage of available credit, typically no more than 10 to 30% of the credit limit, to maintain optimal credit utilization ratios, while implementing robust tracking systems to monitor all transactions in real time, reconcile statements monthly, and immediately dispute any unauthorized or incorrect charges to protect against fraud and billing errors. The selection process for credit cards should involve comprehensive research and comparison of terms, fees, interest rates, and rewards programs, to identify products that align with specific spending patterns and financial goals while avoiding the temptation to accumulate multiple cards that can complicate financial management and increase the risk of overspending or missed payments. Cash advances should be completely avoided, except in the most extreme emergencies due to their immediate interest accrual, high fees, and lack of grace periods, while balance transfers should only be considered as part of a comprehensive debt elimination strategy with a clear timeline for complete payoff before promotional rates expire. Regular monitoring of credit reports and scores helps ensure that credit card usage is positively impacting financial standing, while identifying any errors or fraudulent activities that could damage credit profiles, while maintaining detailed records of all transactions, payments, and communications with credit card companies provides essential documentation for dispute resolution and financial planning purposes. The psychological aspects of credit card management require developing strong mental associations between credit card spending and actual money, leaving bank accounts, implementing cooling-off periods for large purchases, avoiding emotional or impulse buying, and regularly reviewing financial goals to ensure that credit card usage supports rather than undermines long-term financial objectives. When managed with this level of discipline, strategic thinking, and comprehensive understanding, credit cards can indeed become powerful tools for financial optimization, enabling users to earn substantial rewards on necessary expenses, build strong credit profiles that unlock favorable financing terms, enjoy enhanced purchase protections and travel benefits, and maintain detailed financial records that support effective budgeting and tax planning, while providing essential emergency backup resources and facilitating the digital commerce that has become integral to modern life. However, when approached carelessly, impulsively, or without proper understanding of their mechanisms and consequences, these same financial instruments become weapons of financial mass destruction that can obliterate decades of financial progress, trap individuals and families in cycles of debt that persist for generations, destroy credit profiles that take years or decades to rebuild, and create stress, anxiety, and relationship problems that extend far beyond the purely financial realm into every aspect of personal and family life. The choice between these two dramatically different outcomes rests entirely in the hands of the cardholder, and depends absolutely on their commitment to education, discipline, and responsible financial behavior that treats credit cards with the respect and caution that such powerful financial instruments demand, recognizing that the convenience and benefits they offer come with corresponding responsibilities and risks. that must be carefully managed to avoid the financial devastation that has befallen millions of consumers who underestimated the power of this particular double-edged sword. If you enjoyed this video, don't forget to like, drop a comment, and hit that subscribe button. And always remember to be safe and smart.